I receive a lot of questions in my Telegram inbox. How do I count levels using the market maker method? So I've decided to answer those questions using this video. But before we start, I just want to encourage someone who is facing difficulties in trading. Do not give up. You can do it. If I did it, you can as well do it. On that note, let's actually jump into this video. So the first thing is to start on a higher time frame. We all know that the higher time frame trend is our friend, and all other time frames follows what the higher time frame is saying. In my case, I love to start on the daily time frame, but in some cases or instances, you'd see that the daily time frame is not enough to give you the market bias. You may need to start on the monthly or even on the weekly. So in this case, where is our highest point? Our highest point is at this point, right? From that point, that is where we are going to refer as the market data, or where we are going to start our market analysis. So I love to use rectangles to mark my levels and to change colors whenever I also change the time frame. So in this case, we had the first impulsive drop, right? First impulsive drop, and in one daily level we should expect to see three H4 levels. One time frame should have at least three levels of its preceding time frame. In that case, in H1 time frame we expect to see 3M15 levels, and in one H4 level we expect to see three H4 levels. So in this case, we had three levels to the downside, and we call it a completed cycle. Whenever we complete a cycle, we expect a market reversal, no matter at what time frame. So after doing this, we now need to go on the smaller time frame to verify if our levels are correct, because in some instances we would say we have completed the cycle, later to see the market keep going on the downward side. So on the H4 time frame, the last daily level is the one that is necessary for us to verify if we have completed the cycle, which is this one. So I'm going to count levels within these, and counting levels using periods would say a level is equivalent to a period of drop or a period of rise. In this case, we have a period starting at this point, going to this point, from this point, in between this point to that point, within these black traces, right? So marking those and using a different colored rectangle for easy viewing would say we have one, and I'm going to use yellow for the H4 levels. 1, 2, and its consolidation, and then we had the third level, right? In these cases, this is when some other traders become confused. Do we have cases where we have 4 levels? Yes, there are cases when we have 4 levels, because the market makers have not yet acquired enough liquidity to reverse the markets. Therefore, the fourth level will become a head of either an inverted head and shoulder or a head and shoulder pattern. In this case, this was a head, shoulder, head, and shoulder, meaning that it became a structure within the cycle. And it was also a case where they had to clear off and take liquidity for them to reverse the market. From there, we can see the market now creating what we call a daily cycle M pattern. It was a daily cycle that had completed, and the M pattern that is going to reverse this cycle is not going to be an H1M, is not going to be an H1W, sorry, but it's going to be a daily time frame, multi-month or multi-week W, which is the one that occurred. All right, going on the H4 time frame, we can see that they were cycles. So creation of an M pattern of the higher time frame will require 3 levels of the H1, 3 levels of the H1 to create the second leg. In this case, they actually made 3 hits to the low on this higher time frame. And at this point, that is where we were going to make an entry either on this zone or this zone, right? So after that, market maker method will require a lot of logic. Some other things cannot be explained by the trainer, but you to actually know or use your logic to see where the market is going. In this case, after 3 levels of drop, we expect to see a reset or a cycle continuation. But in some other cases, you'd see the market continuing up beyond the reset point. If that happens, you'd know that you are now looking to find entries in line with the market maker cycle, and we call them trades away from the peaks. So that is the simplest trade that you can get, trading away from the peak. In this case, we can see that this is the point that we marked on the daily time frame. It might not have been easy for you to catch this point, but you could catch what we call trades away from the peaks. In this case, we can mark the first level, and the first level is seen with the 1350 EMA crossover, which is this one. So from there, we had a 1350 EMA crossover. I'm going to use red for H1 levels. So we had a 1350 EMA cross, and a trade, the first trade away from the peak is going to be an ID 50 trade, which is the one that came to the blue EMA at this point. So our entry was going to be at this point, and we could hold up to the peak reversal point, right? So we now have 1, then 2, and then the last level to complete our H1 cycle. From now onwards, I want you to know that level 3 trades or reversal trades are very difficult trades. Why? Because you are countering the market maker cycle. In this case, we are expecting to see the market come back, probably give us a reset, and then continue with the daily time frame cycle. Always know what cycle we are dealing with. We are dealing with the daily reset. So an M in this case is not supposed to be just a small M. It's supposed to be a very big M that will take some days to form. However, as I've said, the level 3 peaks are difficult to trade. It's all because the market makers have more room to manipulate, to collect enough liquidity for them, for it to be beneficial for them to reverse the market. So at this point, this is not a signal to have a sell, but there is higher probability to see the market dropping and then probably rise again to create a second leg for the structure of the daily pattern. On that note as well, we may see the market actually not coming down this way. That is where I've said it's easier for you to trade away from the peak. You identify the peak, like in this case, if this peak has been issued, we can find entries away from the peak, take our few pips, and then if this reset peak has been issued, we can also take some few pips away from that peak. Level 3 trades are very difficult. They are low accurate trades. On that note, we come to the end of this video. You may learn more about this methodology using the advanced course. We are actually running a November discount right now. Check out using the link that I'll leave in the description box below. See you on the next one.